Hello everyone, and today is going to be a video on IPDA and institutional order flow, one of the most powerful teachings by ICT. Now, what is IPDA? IPDA stands for Interbank Price Delivery Algorithm. This is the price engine that moves the market around. It's coded off of time and price as ICT teaches, and it's such a powerful tool once we understand how to utilize IPDA in our trading. So basic algorithmic theory tells us that an algorithm is blind without reference points. And like we just discussed, time and price are those two values that the algorithm is going to refer to understand where to move the market to. Our goal as traders is to mimic what the algorithm is doing. So we can use these algorithmic signatures, which we've previously discussed on this channel, as well as everything we're going to discuss throughout this video to help us out specifically with IPDA, with institutional order flow and higher time frame direction. So how does IPDA operate? We know that it refers to time and price, but how do we use this in our trading? Well, we have the 20, 40, and 60-day look back. The algorithm will see this IPDA look back and look back 20, 40, and 60 days and refer to key price levels, right, or liquidity pools, highs and lows on the daily chart within that 60-day look back range. And once we understand how to find these look back targets, which of course we'll discuss later on in the video, it gives us a real good idea with real logic on where to expect price to go on those higher time frames. So after we found our 20, 40, 60-day look back range, we can use the cast forward. What is the cast forward? The cast forward is using the same anchor, which we'll discuss again later in the video, as we do for the look back range. And it gives us a quote schedule for when we can expect those look back targets to be met. So we can get a really good idea of not only where we are going on the daily chart, but when we can expect those targets to be met. Now, how do we identify our IPDA look back targets as well as our cast forward schedule? We need to find our anchor. How do we identify our anchor? Number one, we need to identify a daily market structure shift. After we've identified that daily market structure shift, we need to understand what day that market structure shift occurred. Then we go to the first trading day of the month that the market structure shift occurred, and that is your anchor. And of course, we'll get into charts and look at real examples of this and how we can use it with real logic to understand where price is going. So now let's get into the charts, and we can see here we are on the daily chart on the S&P. So number one, we need to identify our anchor. So based off of what we just discussed, we want to look for a market structure shift, right? We've been so bullish this whole way up, so we want to look for a market structure shift to the downside. That's this swing low, but when are we having that market structure shift occur? On August 17th. Right? So step one and step two from the previous slide are complete. Then for our anchor, we go back to the first trading day of the month that this market structure shift occurred. So to reiterate, it occurred on August 17th when we broke this swing low. So we go back and anchor from August 1st. So number one, we want to identify our 20-day look back range. And as you can see, our 20-day look back target also served as our market structure shift. And this is common. So whenever that occurs, we need to just go back to August 1st and go find our 40-day look back target to see what else we could be reaching for, obviously before we had this whole move down. So here is our 40-day look back target, right? So we purge the 20-day look back, and this is a logical area if we're assuming that we're shifting and going to attack some sell side for price to target here. So after this 40-day look back target is completed, what else would we do? We simply go back to August 1st one more time and go back 60 days. Now, before I move on, I just want to say, look when this low was made. Exactly 60 days from August 1st. Okay? Very cool to see things like that occur. So we identified our 60-day look back targets, but now we can get more information on when we could expect these targets to get met using the 20-day, 40-day, and 60-day cast forwards. So like mentioned earlier in this video, we're just using that same anchor that we used to find our look back targets. So that's still August 1st. And we're going to go forward 20 days. We're going to go forward 40 days. And we're going to go forward 60 days. Now, just looking at this here, see how we're purging the 40-day look back just a couple days before that 40-day cast forward, right? See how we're purging the 60-day look back right around the 60-day cast forward. And now I want to dig into actually what occurred down here once we purged this 60-day look back target. Now, zoomed in on when we got that 60-day look back target, we start to see some really interesting things occur. If we're looking right here, right where my cursor is, right where I have this clock emoji labeled 60-day cast forward, this is 60 days from August 1st, our look back anchor. On the 60th day here, had we purged our 60-day look back yet? No, we have not. But when the market is this close to a 60-day look back target, or just clear equal lows, relative equal lows, sell side liquidity on the daily or weekly chart, it's going to want to swoop down there and grab this 60-day look back target real quick. Now, if this is the 60th day, this is the 61st and of course 62nd day from August 1st, our anchor. After this occurs, what has been completed? Well, we've completed sweeping the 20, the 40, and now the 60-day look back target. When did we do that though? After the 60-day cast forward. So if you look here, right on the right where I have these annotations, think that the market is behind schedule per se. So if we're completing this major objective after the 60-day cast forward, it's going to want to swoop back into the range real quick because it's, again, quote, behind schedule. So how do we use that information to help us understand in the short term where we can expect price to deliver to? So if we get everything we just discussed occurring right down here, we can expect at the very minimum a move back to premium of this dealing range. So from this daily high to this daily low, that's your dealing range. So what could we target on these days, right? This is a daily chart. 1 day, 2 day, 3 day, right? The 4th day we expand higher aggressively. We can be bullish and build our bullish bias on these days using the logic from what occurred after we purge that 60-day look back and when we purge that 60-day look back, okay? We could target liquidity in premium, this volume imbalance in a premium, this SIBI in a premium, right? You guys understand. But this is how you can use IPDA to really understand where to target and where to look price to deliver to on these daily time frames. Now, let's stick with this dealing range and see what occurred. And this is when we start to blend some of these concepts together and we can really see what's going on. So everything we already discussed with what occurred down here after purging that 60-day look back target, what occurs as we move into a premium of this dealing range? We're sweeping buy side here, but remember, the bodies tell the story. This body closed above this SIBI and of course by extension, this volume imbalance here. So the bodies are telling us that it doesn't want to respect this SIBI as resistance. So after we see signatures like this, it's likelier, if that's even a word, for us to expect that we're going to expand higher and reach the high of this dealing range, and that we're not just coming up to a short-term premium just to go lower. So remember, the bodies tell the story. So as on the previous slide, we just saw that dealing range high get purged. But what was that? That was this high, which is a daily high. So this is serving as the market structure shift to the upside. So this sets the stage for a buy program, right? We've completed the 20, 40, and 60 sell side objectives, and then we see a market structure shift to the upside on ES's daily chart. So it's reasonable to expect us to start to attack some of the buy side look back targets, right? So when does this market structure shift occur? November 10th. So where are we going to anchor our look back and cast forward from? November 1st, the first trading day of the month after the market structure shift occurred. And just like we saw when we were finding our sell side objectives, the 20-day look back also served as the market structure shift. And of course, after that occurs, we just go and look for our 40-day and our 60-day look back targets to see what price is going to be reaching for. Now, if you recall from the sell side delivery, it took us beyond 60 days to reach that 60-day look back objective. But as we see here, using our anchor from November 1st for the buy side delivery, we completed all three of these objectives very, very quick. So right around the 20-day cast forward. So just because we complete 60-day look back objectives doesn't mean we just automatically reverse, right? It was very nice down here, but there was more things occurring, which we already discussed. So we don't try to call bottoms. We don't try to call tops, because majority of the time, as I'm sure you guys have noticed in recent market action, they're going to rip it higher than people expect and punish people who keep trying to call the top again and again and again. So after we purge the 60-day look back, we don't have any daily market structure shift, right? And for my next video as well, now that we've looked at how to use IPDA and how to find IPDA look back targets, how to find IPDA cast forwards, we're going to go into a more in-depth look utilizing dealing ranges on how we can really start to form biases, combining dealing ranges and IPDA concepts. Okay, guys, that's going to do it for our lesson on IPDA. And our next lesson will be on dealing ranges, multi-time frame operation. So I do want to mention that I just opened a private community portion of our Discord server. There was too many people reaching out for me to do one-on-ones, and I simply would not have enough time. So the purpose of that private community inside of the Discord is to have a tight-knit group of like-minded traders using time and price, trading the KRP macro model. In there, we'll have pre-market analysis on live stream every morning, live tape reading most days. We'll have daily reviews every night, and we'll do weekly reviews as well as Sunday night outlook. So we'll always be active in there, and it's a great spot if you want a bit more of a personalized learning experience and accelerating your learning in trading and ICT concepts as a whole. The link for that community will be in the description, and I'm looking forward to our next video. See you guys.